NBFC audit, important points, recent amendments. In the event of a upgrading or downgrading of credit rating, NBFC need to increase or decrease its public deposits in accordance with the revised credit ratings assigned to it within a specified time frame and should ensure that NBFC has informed about the same to the RBI in writing. In the event of downgrading of credit rating below the minimum specified grade, with immediate effect, NBFC should stop accepting fresh public deposits and renewing existing deposits. All existing deposits shall run off to maturity and report the position within 15 working days to the concerned regional office of RBI where NBFC is registered. Applicability of Ind AS on NBFCs. With effective from 1/4/2018, Ind AS is applicable to listed NBFCs, unlisted NBFCs, whose net worth is greater than or equals to 500 crores. Next, this listed and unlisted NBFCs includes holding company, subsidiary company, associate company, and joint venture. With effective from 1/4/2019, other listed NBFCs and unlisted NBFCs whose net worth is greater than or equals to 250 crores but less than 500 crores, Ind AS is applicable. These other listed NBFCs and unlisted NBFCs includes holding company, subsidiary company, associate company, and joint venture. Net worth should be checked as on 31st March 2016 or first audited financial statements in CFS. Schedule 3, Division 2 versus Division 3. For Division 2, Ind AS, Division 2 is applicable for Ind AS other than NBFCs. Division 3, Ind AS, NBFCs. NBFCs arrange balance sheet items in order of liquidity. NBFCs are required to disclose revenue from operations and other comprehensive income items on the face of P&L instead of notes to accounts. NBFC is required to separately disclose under receivables the debts due from any LLP in which its director is a partner or a member. Separately disclose trade receivables which have significant change in credit rating and credit impairment. NBFCs should separately disclose in notes to accounts any item of other income or other expenditure which is more than 1% of the total income. Others other than NBFCs should disclose separately in notes to accounts any item of income or expenditure which is greater than 1% of the revenue from operations or 10 lakhs, whichever is higher. Condition or restriction for distribution related to statutory reserves. If there is any condition, disclose separately. Bank audit DP calculation. Stock statements for calculation of DP should not be older than 3 months. If older than 3 months, consider account as irregular filers of stock statement. If the limit is not reviewed, if the limit is not reviewed within 180 days from the due date or date of ad hoc sanction, it shall be considered as NPA. NPA classification is borrower-wise, not facility-wise. Next, NBFC provisioning details. From the due date to date of considering the NPA, the asset will be considered as standard asset. In case of standard asset, 10% of the provision needs to be created. From the due date to NPA, 3 months should be considered. 3 months should be the date from due date to NPA. 3 months should be considered to treat it as NPA in case of NBFCs, systematically important NBFCs, which accepts deposits or not accepts deposits. 6 months time should be given for NBFCs non-systematically important, which accepts deposits or not accepts deposits. From NPA date to doubtful date, that is, for NBFCs which are systematically important, which accepts deposits or which do not accept deposits, 12 months should be considered. In case of NBFCs non-systematically important, which accepts deposits or do not accept deposits, 18 months should be considered from the date of NPA to doubtful. During the date of NPA, during the period between NPA date to doubtful date period, the asset will be considered as substandard. In case of systematically important substandard assets, 0.4% is the provisioning. In case of a non-systematically important substandard asset, 0.25% is the provisioning. Next, after doubtful, the following other provisions needs to be created. Doubtful up to 1 year, 20% of the provision. Doubtful greater than 1 year, up to 3 years, 30% needs to be created. Doubtful greater than 3 years, 50%. After doubtful, asset will be considered as loss assets. In case of loss assets, 100% of the provision will be created. Next, assertion. Assertion means information asserted by the management. Assertion of management will give assertion pertaining to transactions, balances, disclosures. Assertions are of two types: explicit assertions, implicit assertions. Next, an account is regularized near balance sheet date. In such a case, we need to check the intentions and deem it as NPA. NPA treatment is borrower wise, not facility wise. Net worth or position of the borrower is not considered while classifying the NPA. Next, advances under consortium. NPA, even if the lead bank does not disburse to other banks for more than 90 days. In case of consortium cases, if the lead bank have not shared the share with other banks for more than 90 days, it will be considered as NPA. Erosion in value of securities. Decrease in value of securities less than 50% means doubtful, less than 10% of the loan means loss. Concurrent audit will be done for branches. At the time of concurrent audit, we need to check advances greater than equals to 50% and deposits greater than equals to 50%. Branch will have head offices, zonal offices, regional offices, and branch offices.